Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy, what is today, Thursday? I hope you're having a happy Thursday regardless of how red we saw the day yesterday. And hopefully you took some profits, especially on the way down like we did as a community. What a nice 61% in about 1 day's time. So it's really awesome, good 30-hour trade there. So again, what we're going to look at here is, of course, a lot of different Bitcoin charts. We're going to look at the CME futures, kind of see what's going on there. We're going to look at Bitcoin dominance as well as just the index there and the volume associated with all the currencies there across the board, kind of an aggregated look. And then we're furthermore going to take a look at some information here as well with high block capital data, kind of, what's going on in the back end there, stuff you wouldn't normally see in the chart. So be sure to watch all the way through the end. I think it's going to be very helpful for you. And of course, if you could do us a favor, help us grow the channel. CryptoCash.tech is a site if you want to become a better trader. But more importantly, we're trying to grow our Twitter space here as well. We're bringing super relevant information to you consistently throughout the day, and somewhere in the range of 25 to 50 tweets per day. I got a full team here working to be able to get you what you need here and to make sure that you're in kind of in the know, right? So to me, this kind of social media is a really good opportunity to be able to discover that, right? Furthermore, too, this is kind of a quick look at our recent Bitcoin trade. We got in at a short at about, 30,375 as an average. We have 2 entry targets. We got filled on both. And as you can see here, the price kind of just went sideways for a little while. And then, of course, we took some massive profits near the end. Once again, right around, I think it was 61% in just under 30 hours. Okay. So again, as a swing trader, that's kind of what you got to do. You got to hold on to some of those trades and kind of trust your instinct, okay? Again, we got a lot of things built into those trades. They're fully automated. They are beneficial in the sense that the price action, actually, you take profits in the moving target. The actual stop loss adjusts with the price, okay? So it's really, really cool to kind of see how that goes. So anyways, help us grow that out. Really, really help you, help us help you however you want to do it. And I greatly appreciate it nonetheless. All right, so here's the thing with Bitcoin. Let's go ahead and start with some cool stuff, actually. Let's go ahead and start at the top and kind of work our way down. So first of all, CME gap here is soon to be filled. We can see this here at 28,000, about 28,300, in a little range there. We have a CME gap here. It's a little easier to see on smaller time frames. Let me go ahead and zoom in for you. And if you're not familiar with CME gap, these are basically just futures that are traded, and you can see that the price closed here on a Friday, which they normally do. They close at Fridays. And then you can see here, of course, right at about Sunday, when the market opened back up again, it gapped up about 500, okay? So there's a range there that's going to get filled. It's very common for that to kind of get filled. It's kind of a profit target, if you will. And we've already wicked down there once, and there's a good chance we could go all the way down to 28,000. Furthermore, and this is less likely because we can see this here, we can kind of see the first gap that was back in, I think it was back in March. Yep, back in March. And we can see that the price action gapped up right there at 20,200, upwards about 21,300. Now, I'm not super concerned with this one as much because we did have a gap up that never got filled, so that kind of effectively replaced that. So in essence, I'm not super concerned with that, but that is also still a relevant CME gap that could get filled, right? Again, not super concerning. When it comes to Bitcoin dominance here, this is something we need to recognize too, because right now, at this point, Bitcoin is rejecting off of that resistance level. Okay, so previously it's had difficulty passing this 48% mark, and every time it gets in this range, it will turn itself around. Okay, and what we experienced recently is when the price came up really high, and concurrently the price of Bitcoin went sideways, we saw a lot of altcoins surging. Okay, and that's the main reason why, is because we saw the price of Bitcoin dropping. Okay, this is a unique phenomenon that has to happen when the Bitcoin dominance goes high, the price of Bitcoin goes high, and in turn, both of those two things either drop or one stays the same, the other one lowers. With the Bitcoin dominance coming down here recently, that's when we saw a lot of alts surging because money's coming away from Bitcoin, taking profit, and then in turn going into altcoins. Okay, so that's essentially what's going on here. And in that sense, it's kind of steadily holding at this level. This is positive in the overall sense of things. We want Bitcoin dominance to come up a little bit more so that way we can get a larger pump from Bitcoin because that's necessary, right, in order for the altcoins to essentially be able to surge second to that. The key catalyst is to notice that Ethereum is in a good shape and holds its price point, which is kind of doing right now. If we close here on the weekly at about 1950 or higher, we're going to be in good shape to see that continuation. Again, conversation for another day. I cover Ethereum as well, fairly frequent, but generally speaking, that is something to recognize when Bitcoin surges, and then it starts to taper off. Ethereum holds strong while Bitcoin sells off, and then altcoins surge second or tertiary to that. All right, so that's kind of where we're at there for the overall sense of things there. Let's go ahead and take a quick look at the index here for Bitcoin. And the reason why this is important is just to kind of get perspective on volume. The reason why volume is important is because it's when the unspoken, it's very uncommonly used, if you will. I've used volume for years now. Used to trade natural gas, crude oil, futures back in the day, and that's where I got my day trading legs. And I can tell you that was a very volatile market prior to Bitcoin. Okay, and in that environment, volume was a very strong indicator. I used volume weighted moving averages and average price, and those things are all very helpful. But what I'm getting at here is the moving average here on the volume, the price being below that or close to it is not a great sign. We also see here with the price kind of coming down and or concurrently the price coming up. When the price goes up and volume comes down, there's a matter of time before the price comes down with it. Okay, so again, this is kind of like an RSI bearish divergence, if you will. Only difference is based on volume. So again, just something to kind of think about. Important stuff to note. It makes sense as to why this is coming down. Obviously, the gap has to be filled and the price action has to come down. But once again, you can kind of see this here. Again, this is just the Binance exchange. It's not a good indication, but you can see that even on Binance, we have that type of bearish divergence where the price is losing its momentum. And of course, volume is dissipating. All right, so try to pay attention to volume. It's something that I teach in my Trading Academy. It's very important to recognize, and I think it's something that we all need to know and use more frequently. All right, so that's kind of that there. Let's go ahead and jump over to High Block Capital Data, kind of see what's going on the back end here, because we can see here when it comes to liquidation levels, for example. We got a lot of liquidation the last 48 hours. No surprise, of course, the price broke down below 30,000. Open interest is down. Fear and greed index is also down. Okay, so in other words, there's more fear and less greed, so to speak. So it's kind of naturally working itself out. I'm not super concerned with that. That's fairly standard. The one thing I do like to see here is that there's a lot less asks than bids than the day previous, right? So in other words, people are shorting less into this, which implies that we're getting closer to a potential bottom. And I like the sound of that. Furthermore, too, we got this monthly here. I just want to kind of draw perspective on this. I sent out a tweet this morning regarding how I feel that Bitcoin should be able to bounce off the 28,000 range, but if not, we go down to 27.4. That's this right here. We see the most amount of liquidations in the most recent time frame. Okay, keep in mind, these are not just liquidation levels. These are also positions that are open and or having already been closed as a result of just, fear, concern, greed, whatever the case is. But these are positions that are essentially like, just say you had a limit order at 27.4 and then you canceled it, that'll add up here. Okay, so that's essentially what that's looking at. But generally speaking, that's a point of contention, 27,400. So if we do lose this little range that we're in right now and that gap gets filled, 27.4 could very well be the next target. Other than that, we can see just plain simple, a lot of longs getting liquidated here, and the most amount of open interest, and actually I'm kind of curious about this, for longs, we will see here the most amount of longs are at about 28,600. Okay, so a lot of longs right now are underwater for the moment. We're actually correction, they're pretty much break even because I think 28.6 is the current price point. When it comes to shorts, though, we can see 28.7. So there's a pretty close little margin there where people feel like the price will not go higher or lower. There's a lot of shorts and longs kind of hedged at that level. Okay, so really that just tells us that we shouldn't expect dramatic drop below here, but if we do, it should drop. It will probably see a wick all the way down to about 27.4, low 27s, if you will. We have a short still open as a community. Our fifth and final profit target is at 28,000 even. So I'm comfortable or confident we're going to be able to see that. In fact, if we take a look here, this is our setup here recently. Our most recent profits was 28,600, and we're looking at 28,000 even for our fifth and final. So hoping we get filled there as well. And if so, I'll make a video out and I'll go ahead and just shoot it out through Twitter so you can kind of see that, because we always like to celebrate the small stuff, right? All right, so let's go ahead and wrap things up here. We've already looked at all the back end stuff. Now the important stuff comes into play. Now that we know that, how does that factor into the charts? Well, first of all, RSI is at 50 on the RSI. Well, big surprise, no surprise. It's really just kind of par for the course. What we're getting at here is the fact that the price action has been up over 50 for some time. It broke above 50 right here when it went crazy parabolic, and it's been up over since. That being said, we're testing 50 now for the very first time in almost, what is it? Drum roll please, about 5 weeks. So in 5 weeks, we've seen the price action above 50 on the RSI. With it coming down to 50 right now, that is a potential bouncing point. Okay, you got to keep in mind 50 will initially always work as a support level. But if you break through that soundly, in other words, a closure of just say below 28,000 today would absolutely put us below 70 on the RSI, or sorry, 50. And that would prove bearish. Not to say it couldn't bounce back up above, but typically you'll see something like this occur when the price breaks below. Okay, so we very well could be at the start of something like this here, where the price action comes down to test 50 on the RSI and continues lower, and we start seeing these little bear flag patterns that are emerging. So what we're hoping for is the price doesn't do one of these and then come back down further. Okay, so again, those are just little patterns you want to kind of pay attention to, but to me 50 on the RSI is like the first thing I look at on the daily or the 4 hour. So I think they're really super relevant and it's helpful to understand. Furthermore too, RSI and MACD are both showing bearish qualities here. Even though the RSI hasn't broken yet, it feels like it could. Furthermore too, we lost the 20-day SMA. This is never a great sign. 20-day SMA is typically a trend setter, and with us being below that trend, we can assume that we're mostly bearish. So to me, even though we're above 50 on the RSI, the MACD and the 20-day SMA are telling me that we have further downside potential, or that it's going to be difficult to break back up above 30,000. That's just my speculation. We could be range bound in this range between, again, 28,000, 29,000, but I think seeing above 30,000 for this right now seems super, it's very unlikely. Let's just put it that way. All right, because again, it's going to take a lot of volume, which we've proven isn't the case right now. We don't have a tremendous amount of volume across the market. And again, alts are bleeding. There's a lot of things that are going on. People are taking their profit and it makes perfect sense. Now, RSI is at 30 here on the 4 hour. This is typically a positive sign. We can see the money flow index is fairly low as well. Let's take a look at this history in which, when Bitcoin did something like that. So when we came down to 30 in our RSI last, it was sometime back in March, which was a bad month. Price went sideways for about 3 weeks and just dropped again. That being said, we could see a very well similar circumstance where the RSI slowly continues higher, price goes sideways, and then we see the price drop at that resistance level at 50 and it comes back down. Okay, so that's roughly what happened back here in March. Not to say we couldn't push it here, but we have to have volume to back that up. We have to have volume to support it. So I'm going to pay close attention to volume and see how that works moving forward here and ensure that we have that volume to support our long positions. Right now, I don't feel comfortable taking a long position at all. I don't feel super comfortable taking another short right now either, in truth. But again, it depends on what kind of your position sizes you're using too, right? I always recommend small position size and low leverage. Yes, we did 20x into this trade, but I can tell you I felt very comfortable doing that. So again, different strokes for different folks. Be careful in how you trade. That being said, let's wrap this up here. One last thing, TD sequential on the hourly. See kind of where we're at. We are overextended at all? Doesn't look like it. Okay, we hit this overextended state here with a 9, went sideways for the most part and lost that support. So in truth, we got another 5 more hours continuation until we could see its bottom, at least for the day. Keep in mind, we got about 5 hours left of trading here in the traditional markets today. So is that a coincidence? I don't think so. It's very common for that to occur. That's why TD sequential is in 9s, because traditionally, the regular market's going to be open for about 9 hours if you include post and pre-market. Again, different things to kind of think about. All the stuff that kind of goes circling in my head. I tell you, it's hard to get sleep when you think about stuff like this all the time. But thankfully, I exercise frequently, which is another thing you probably should consider doing because it's not talked about enough. Make sure that you have a healthy body and a healthy mind because that will make a big difference when trading. Okay. Again, talk about all that in my Trading Academy. Check that out in your own time. Let's go ahead and say one last thing here. Ichimoku Cloud. All green lights to leave your short position open, but we're getting closer to an end here, just with the lagging span kind of telling us conservatively we might want to close our trade. So that's kind of where we're at here for Bitcoin. All in all, a lot of good information, but I would say for the most part, the easiest summary here is that we are bearish, and I do think that there's a good chance that we're going to see that CME gap continue to get filled. I think 28,000 is very realistic, and it's just a matter of how much further it could go. Once again, this will change again tomorrow. It could very well just turn itself right around. Stranger things can happen. But I would just prepare for the worst and hope for the best. That's something my grandpa always taught me, and I think it's always served me pretty well. So protect yourself. Be careful, be cautious, and careful on who you listen to as well. If you get too much information out there, you can get inundated with a lot. I personally just stay in my own bubble and do my own thing because I've been doing this for a very long time. And at this point, stepping out of my bubble, of course, to help bring you guys as much as we can here regarding the relevant information. So please help us grow our Twitter space, help us grow the community. Like, subscribe, all that good stuff. And if you want to become a better trader, again, cryptocash.tech is a website. And obviously, make sure you check out our sponsors too, because we do have some really awesome trading competitions that happen monthly with BitGet and Bybit. I would recommend BitGet at this point just because Bybit has some issues in the US here soon with KYC, and that'll be a problem for some folks, but at this point, BitGet's definitely the way to go. All right, thanks again so much for joining me here. Hope you have a great rest of your day. We'll see you in the next one.